Okay, so till now we are done with the 10 chapters. Today I'm going to start with your process and operation costing area. Whatever I had explained earlier, we'll kind of revise that fully and ensure that this area is fully taken care of. We'll solve problems. We'll solve problems. I'll first give brief overview of this area. Under process costing, what happens is we are using this in those industries where manufacturing is carried out in back in series of processes. There's an output of every process which becomes the input of the next process, and this goes on. Now, why we are learning process costing is an organization at the end of the year, that is on March 31, can have some stock in process 1, some stock in process 2, some stock in process 3. I need to do valuation as per accounting standard 2. You have to value the inventory. For valuation of inventory, I need the cost data. So this is one utility of my process costing. It will help me in valuing the closing stock which is available in the company. Also it can help me in certain decision making. What is decision making? I do there's something called as buy or make the product. That is, some processes I will do it in house and some processes I will outsource. These type of decision making can be done with the help of process costing. It is basically used wherever manufacturing happens in series of processes. The output of the first process becomes the input of the second, then input the output of second becomes the input of the third, and it goes on. This is the order in which it will keep going on. Now, whenever we solve questions in process costing, the question may have information on work in progress. If there is any data on work in progress in the question, it falls under the category of equivalent units. Otherwise, it falls under the category of non-equivalent units. First, we will do few questions on non-equivalent units where I have only two steps. One is input-output statement, and second is a process account. Now, what we do in input-output statement is we track the input of the company. So, process costing is used in those industries where my manufacturing goes through series of processes, and it helps me knowing the profitability or cost of each process. Now, what I do is every company will have some opening stock. It will add extra input, that's called total input. Total input in the process, deduct the closing stock, that's called process to production. From the process to production, I can have something called as normal loss. What is normal loss? Is a scientifically determined loss. A scientifically determined loss which will happen for every company. It is an unavoidable loss. It is a unavoidable loss. This is going to 100% happen for any company which is doing manufacturing. This loss I deduct, I get expected output, and I compare that with actual output. For example, in process 1, I expect 40,000 units and I get only 38,000. If I get lesser than what I wanted, it's called abnormal loss. And if I get more than what is wanted, it is called abnormal gain. So there's an abnormal loss and abnormal gain. Loss arises in case I am getting lesser units than what is needed, and gain arises if I get more units, than what is needed. This normal loss, question will say it's a percentage of something. If it is silent, it's a percentage of input. Input means what you added in the current year. Otherwise, there is another term called as total input. It can also be a percentage of total input. It can also be a percentage of processed production, and it can also be a percentage of the actual output, or it can be anything else, whatever the question wants to give. So there is a loss which is going to happen in a process. Now, once this is done, you will be able to understand whether an abnormal loss is happening, abnormal gain is happening. The entire data is now put in the form of a process account, which is nothing but a trading account. A trading account, you record opening stock, you record raw material cost, you record labor cost, you record overhead cost, you keep recording all expenses in the debit side. In the credit side, I record the losses. What is the losses? By normal loss and by abnormal loss. Now, why this is in the credit side is this will go and sit in the debit side of the loss account. This will go and sit in the debit side of the loss account, and I have to debit all losses. So by normal loss, by abnormal loss, ultimately in the loss account, you will write by P&L. You will write by P&L, and it will go to the debit side of profit and loss account. By next process, if you transfer, and by closing stock. In this process, I have to calculate something called as cost per good unit. What is cost per good unit is in material cost. We learned aggregate material cost. We learned aggregate material cost divided by effective good units. When we did cost sheet, we did direct material, direct labor, direct expense. Then less one item we were doing recoveries for sale or scrap, and we got cost of production. Similarly, I'll add up all the cost, deduct any scrap value, that's called net cost incurred, and divide this by expected. Expected means what any company would have got. If you get more or less, it's your problem. If you get more abnormal gain, you enjoy it. If you get less abnormal loss, you will be penalized. In the denominator, we will divide only by what is expected. I'm not going to take a higher number. I'm also not going to take a lower number. I'll divide only by a number called as expected output. Now, in this chapter, one important part is technically I think 8 9 questions, but 6 questions is what I logically need to do. One on non-equivalent units, and in equivalent units we have FIFO method 2 questions, weighted average cost method 2 question, and there's 1 question on inter-process profit. If you are clear with all of this, any type of question you should be in a position to handle. Even in the latest RTP which ICI released, they've ended up asking an inter-process profit question for a 10 mark MCQ. It's a 10 mark MCQ based question, but it is on inter-process profit. Those areas normally students are not very clear because they are not very clear on the concept around it. So here, first I decide whether there is a normal loss or an abnormal loss, and I record it in the process account. I record this in the process account. I will explain and we calculate this item. Cost per good unit is equal to debit side of process account. In the debit side, all expenses are written. Obviously, it says excluding abnormal gain, but anyway, when you calculate cost per good unit, you will not know the value of abnormal gain. So it's basically total of the debit side minus sale value of normal loss divided by expected output. See, if you get more output, no, and you divide by a higher number, cost per unit goes down. So if I've got more, let me enjoy it. I don't want to pass it on to the customer. And if I get lesser units, it's an abnormal loss. You divide by a lower number, cost per unit will go up, and customer will not pay. If my cost is 1000 and I should ideally get 100, cost is 10 rupees. I got 80. I cannot say 1000 divided by 80 and cost is 12.5. I got lesser units, I will be penalized. But if I get more units, let's assume I got 120, then 1000 by 120, no need to do. That is 8 rupees. You need not do that. It's only 1000 by 100. It is always divided by expected output. If you have got more, less, it's all your headache. And if you get more, enjoy it. If you get less, let you be penalized. Customer is not going to be rewarded, and customer will not be penalized. For the inefficiency of the company. Let's see first input output statement. Let's come to question 1. Production in a manufacturing company passes through 3 processes, 1, 2, and 3. Output of each process is transferred to next process, and the output of process 3 is transferred to FG. Normal wastage in each process and the realizable value of the same are given below. They have given 3 processes. We'll do only 2 processes, process 1 and process 2. 3 I will not do it, so that you get grip on 2 process accounts. Details of cost: sundry material. Sundry material is an additional material. Direct labor cost, production expense, and output. Every process output is given. First process was fed with 40,000 units of input, costing 3,20,000. This is the main raw material. Which has been added in the first process. No opening, closing, work in progress. No opening and closing, work in progress. In case there is no opening and closing, work in progress, it is non-equivalent units. Question 2 step. We will do first step called as input output statement, and in the second step we will do a process account. You will do it along with me. Do working note 1, input output statement. Working note 1, input output statement. Particulars: process 1, process 2, Process 3 I will not be doing, but you can have space later on for you to do. Only process 1 and process 2 we will do. Particulars, in case even if you have done this earlier, let's do it along with me. In case even if you have practiced, it's okay. Particulars, process 1, 2 and 3. Our format says opening stock, add input, opening stock, add input, total input, opening stock, add input, total input, deduct closing stock. You could have learnt it differently also. If you have learned differently, you want to follow what you have learnt is okay. But I can tell you, whatever approach I'm doing will work for all the question and you will not have any confusion as far as this area is concerned. So you want to change the approach, I leave it to you. But I would suggest this approach would be more comfortable in case you get used to it. Otherwise, if you're very confident in this area, whatever way you have learned, because ICI doesn't write it like this, they write it differently. Net answers, everything will match. We call it as processed production, processed production, less normal loss, expected output, actual output, abnormal loss or gain. Abnormal loss or gain. Opening stock, add input, total input, less closing stock, process production, less normal loss, expected output, actual output, abnormal loss or gain. This is the format we use. We'll first do process 1. Once that is over, I can move to process 2. That is over, I can move to process 3. Opening stock is not there in the question. Opening stock is 0. Opening stock is 0. Process 1, we started with an input of 40,000 units. We started with an input of 40,000 units. Total input is also 40,000. No closing stock in this question. Process to production 40,000. Process to production is 40,000. Normal loss given in the question is percentage of normal waste 5. Percentage of normal waste is 5. So normal loss is 5 percentage of normal losses 5 percentage of my input, 5 percentage of my input. Whenever it is silent, it's on input into 5%. Expected 38,000. Expected is 38,000. Expected 38,000. First process actual is also 38,000. Actual is also 38,000. So technically no abnormal loss, no abnormal gain. In the first process, I do not have abnormal loss as well as I do not have abnormal gain. Second process, opening stock is 0. Input is now whatever is the actual output, whatever is the actual, not expected, whatever is the actual, 38,000. Total input is 38,000. Closing stock 0. Processed 38,000. Processed is 38. In the second process, my loss is 7%. Loss is 7% of input. Third process, we will not do it. Let's not waste time on that. You can do it later. The space is only given so that you will do it later. 7%. Expected 35,340. Expected is 35,340. And actual is 34,600. Actual is 34,600. So I wanted 35,340. I wanted 35,340 and actual is only 34,600. Actual is only 34,600. This scenario is abnormal loss. I've got lesser than what I wanted. How much is the abnormal loss? 740 in bracket abnormal loss. This 34,600 will be the input of the next process. We are not doing third process. I don't want you to do it now. Otherwise, your focus will shift on writing process 3 numbers. Process 1, process 2. Any doubts on this? Next, process 1 account. Process 1 account, debit particulars, units, amount. Credit side particulars, units, amount. Process 1 account. Process 1 account. Particulars, units, amount, particulars, units, amount. There is no opening stock. It's like a trading account. There's no opening stock. To material. To material. We track units as well as amount. 40,000 units, 3,20,000 value. To material, 40,000 units, 3,20,000 value. Then there is to sundry material, 1,20,000. All expenses you'll have to write in debit side. To sundry material, 1,20,000. To material, 40,000 and 3,20,000. Sundry material, 1,20,000. To direct labor, 80,000. Direct labor, 80,000. And to production expenses, 40,000. To production expenses, 40,000. To material, to sundry material, to direct labor, to production expenses. Once amounts are written, I have to tally the units by writing normal loss, abnormal gain, and transfer to next process. So by normal loss in the first process was 2,000. By normal loss, 2,000. No abnormal loss, no abnormal gain. By process 2, we transferred 38,000. We transferred 38,000. First segment, write the amounts. Second segment, tally the units. Second segment is tallying the units. My units, debit side units is 40,000, credit side units is also 40,000. Both are tallied. This is second working. Third working is you will have to write the 2,000 units normal loss multiply with realizable value. Multiply with realizable value. Realizable value given in the question is 70 paise. Realizable value is 70 paise. So 2,000 into 0.7. 2,000 into 0.7. Clear? In this question, I do not have more items as balancing figure. Abnormal loss, abnormal gain, and all is not there. In case that is there, cost per good unit will be very critical. But still, let's calculate it right below this. Cost per good unit is equal to all expenses minus sale value of normal loss divided by expected output. All expenses minus sale value of normal loss divided by expected output. Expense total, I'm telling you the number is 5,60,000. The total in the debit side is 5,60,000 minus normal losses 1,400. Normal losses 1,400. Expected output, it's not divided by actual output. Expected in this question was 38,000. Process 1, input output statement, you will see 38,000. Input output statement, you will see 38,000. What's the number you get cost per good unit? 14.7 per unit. This cost will be multiplied for abnormal loss, abnormal gain, transfer to next process. So in the concept book, you see the concept, it says whatever cost per good unit we calculate, it will be used to value. That is a valuation rule. For normal loss, realizable value, which we have already done. Everything else is multiplied with cost price. Everything else is multiplied with cost price. So 38,000 into 14.7 into 14.7, and both the side will tally. Both the sides will tally. 38,000 into 14.7. I could have also taken it as balancing figure, but you'll understand the importance when I go to the second process. 38,000 into 14.7. Any doubts on this? Clear? Then comes the process 2 account. Process 1 is done. Process 2 account, same format. Debit and credit. Particulars, units, amount. Process 2 account. Process 2 account. To process 1. To process 1 account. Process 1 account. We wrote in the process 1 account by process 2. What was the value? How many units? 38,558 600. 38,558 600. To process 1, 38,558 600. Then various expenses are given in the question. They have given expenses like sundry material, direct labor, production expense, all that we have to write. To sundry material, 40,000. To direct labor, 60,000. To production expenses, 40,000. To production expenses, 40,000. Whatever expenses are there, everything has to be returned. Then by normal loss, let's close the units part of it. By normal loss, how many units normal loss? Look at your input output stream. 2,000. How many units abnormal loss? By abnormal loss, if you have abnormal gain, you'll have to debit it. By process 3, by process 3, how many units process 3 transferred? 34,000. Units are tallied. Units are tallied. Units are tallied. Any doubts on this? So first I write the debit side expenses. Second, I tally the units. I tally the units. Any doubts on this? Normal loss multiply with realizable value, which is given in the question. 80 paise into 0.8 into 0.8. I have two missing information. So this two missing information you will have to do with cost per good unit. You will have to do it with cost per good unit. Any doubts till this? Cost per good unit is all expenses. 698 600. All expenses 698 600 minus sale value of normal loss. All expenses minus sale value of normal loss divided by expected output. What is expected output? 35,000. Give me a 4 decimal answer. 7078. 19.7078. Any doubts on this? Any doubts on this? This I'll multiply with abnormal loss as well as with process 3. I will multiply, but I'll not write the amount because rounding of differences can be there. I'll take it as balancing figure. Listen here. This do into 19.7078 and write the figure. Into 19.7078, you get 14,584. 584. 14,584. Clear? Second item, if I multiply, see here, if I multiply, the account is giving 681,890. It will not tally. It will not tally. In order to ensure it tallies, I'll take it as balancing figure, but I'll do that calculation in the calculator. I'll take it as balancing figure, but the calculation will be done in the calculator. I'm going to do the calculation in the calculator, but I'll take it as balancing figure. I'll take it as balancing figure. 681 triple eight. This ensures the account is tallied. If you multiply it to 681, 890, 2 rupee difference is there. Process 3, I'm not doing. You will practice it later on. After this, I have to do normal loss, and abnormal gain account, which I'm going to explain in the second question. I'm going to explain that in the second question. Any doubts on this question? Any doubts? This is a basic question where sales is not there. Second question, you will see with sales being there. Now, let's come to this. This came in May 24 exams. Meta Company Limited is engaged in the production of product Trio, which passes through two different processes, process P and process Q. Information obtained from books is as follows: raw material used, raw material cost per unit, wages, expenses, selling price, wages, expenses, and selling price. So there is some data on selling price, which means sales is happening, production overhead is 3 lakh, and absorbed as a percentage of direct wages, that is in the ratio of direct wages. We'll have to distribute this. Actual output is 9,200 and 6,400. 3/4 of P is passed on to Q, and balance was sold. Entire output of Q is sold. In process Q, entirely we have sold. Management and selling expenses 1,70,000. These are not allocated. These are not allocated to the process. So this will directly go to my P&L account. This will directly go to P&L. Normal loss is 6%, 10%. Loss is 5 rupees and 8 rupees. There is no reference of any degree of completion or any opening work in progress or closing work in progress. Assume that P and Q are not responsibility center. For solving, I will keep it as P, not a responsibility center. Q is a responsibility center. So both working, you will understand. P is not a the solution has not a responsibility center. What difference does it make? You will understand when we write the answer. So I will keep the question as P is not a responsibility center. Q is a responsibility center. What difference does it make? You will understand when we do the solution. So let's first do input output statement. Input output statement. Let's start. Working note 1, input output statement. Particulars P and Q. Input output statement. Process P, process Q. Process P and process Q. Process P and process Q. Right, opening stock, add input, total input, less closing stock, process production, less normal loss, expected, actual, abnormal loss or gain. Abnormal loss or gain. Opening stock is 0. First process has an input of 10,000 units. Raw material used 10,000. So input is 10,000. Total input is again 10,000. Total input is 10,000. First process, raw material used. Raw material used is 10,000. Total input 10,000. No closing stock. Processed production 10,000. Processed production is 10,000. In the first process, my normal loss is 6%. Second process is 10%. So normal loss is 6% of input 600. 6% of input 600. Expected 94. Expected 94. Actual I think is 92. Actual is 92. Abnormal loss. 200 units abnormal loss. I've got lesser than what is needed. I've got lesser than what is needed. In a normal scenario, whatever is the output of the first process will become input in the next process. But here, I've said 3/4 was passed on. 3/4 was passed on, and balance 1/4 is sold. Balance 1/4 is sold. So 3/4 is 6,900. 6,900. 9,200 into 3 by 4 into 3 by 4. 6,900 went to the next process. Total input 6,900. No closing stock. Process to production 6,900. Normal loss in this process is 10% of input. Normal loss is 10% of input. Minus 690. Expected 6210. Actual is 6400. 190 abnormal gain. 190 abnormal gain. There is an abnormal gain because I've got more than what is needed. I wanted 6210. We ended up getting 6400. We ended up getting 6400. More than what is needed. More than what is needed. Technically called as abnormal gain. Technically called as abnormal gain. 190 units abnormal gain. Clear? Like the usual manner, let's do a process account now. First is process P account. Process P account. Only thing add on is the sales. And there I'll explain not a responsibility center and responsibility center difference. Process P account. Process P account. To raw material. To raw material. We have added an input of 10,000 at 80. We have added an input of 10,000 at 80. So 10,000 units into 80. Raw material 10,000 into 80. 10,000 units at the rate of 80 per unit. At the rate of 80 per unit. You keep writing but understand the workings. Okay, if you are not understood and writing, no use of that. Understand and then write. Next is various expenses. To direct wages. To direct wages 52,000. Direct wages 52,000. To direct expenses 8,600. To overhead cost. To overhead cost. To overhead cost. Question has said this 3 lakh split in this ratio. Technically, this ratio is 2 is to 3. Technically, the ratio is 2 is to 3. 52,000 is to 78,000. 52 is to 78 is technically 2 is to 3. Or you can say 3 lakh divided by 1 lakh 30, the total of that, multiplied with 52. Multiplied with 52. You will get amount as 1 lakh 30,000. Expenses all written. There is a management and selling expense which will not come here. Management and selling expense is not going to come here. Then by normal loss 600. By normal loss, we'll have to tally the units. We'll have to tally the units. By normal loss, by abnormal loss 200. By abnormal loss 200. By cost of sales. By cost of sales. This is unit sold. Okay, whatever unit sold. Why it is called cost of sales, I'll explain. By cost of sales, 2,300 units we sold. 2,300 units we sold. 9,200. 1/4 sold. 3/4 went to the next process. 1/4 is sold. 3/4 went to the next process. By cost of sales. By process Q account. 6,900 units are tallied. Step 1, debit side entries. Step 2, checking the units. Checking the units. 10,000 in the debit side, 10,000 in the credit side. Units have got tallied. Units have got tallied. For the normal loss, we will write the amount. Normal losses, number of units of normal loss into the realizable value. Into the realizable value. Realizable value given in the question is 5. So 600 into 5. 600 into 5. 600 into 5. For balance, you will have to do cost per good unit. Cost per good unit is equal to all expenses 980, 600 minus 3000 minus 3000 divided by expected output was 9400. What's the cost per good unit? 104. Cost per good unit is 104. Now, listen, if you are not a responsibility center, in the credit side, you cannot write by sales. In the credit side, you cannot write by sales. You will write by cost of sales. This will go to the debit side of P&L. And in the P&L, you will write by sales. For process P, I'm explaining this approach. Q, I said it is a responsibility center. I'm changed the problem to explain the concept. So just multiply everything with 104. Everything with 104 and close it. Everything is multiplied with 104. Selling prices, I think 130, does not matter. Whatever be the selling price, it does not matter. I'm not going to write sales. I'm not going to write sales. I'll just write by cost of sales. We'll just write 104. What happens if you write sales, you'll understand in process Q, where I've changed the question as it is a responsibility center. Any doubts on this? Then process Q account. Process Q account. Process Q account. To process P. To process P account. 6,900, 717, 600. 6,900 and 717, 600. To process P. Process P. And to direct wages. Direct wages 78,000. Direct wages is 78,000. Then we have direct expenses 11,100. 11,100. To production overhead. Production overhead 3 lakh. I'll be splitting in that ratio. Amount will be 1 lakh 80. Amount will be 1 lakh 80. We have written the debit side items, various expenses we have written. We have written the various expenses by normal loss. By normal loss 690. Normal losses 690. I think we have abnormal gain here. Two abnormal gain. Two abnormal gain. How many units of abnormal gain? 190. Two abnormal gain 190. Two abnormal gain 190 by sales, not cost of sales. It's a responsibility center. I'm going to record sales. I'm going to record sales in this process. I have assumed it to be a responsibility center. 6,400. 6,400 units got tallied. Units got tallied. First step is writing all expenses. Second step is tallying the units. Tallying the units. You go order by order, you'll be able to complete it. Then normal loss, some realizable values given in the question. Normal loss realizable values 8 per unit. So multiply with 8. 690 into 8. Below this, cost per good unit is equal to 986,700, 5520. What was the expected output in your input outputs? 6210, 158, 158. 986,700 minus 5520 divided by 6210, I get 158 per unit. I get 158 per unit. Any doubts on this? Clear? Any doubts on this? Okay, now listen. I multiply this with 158. I multiplied this with 158. Abnormal gain is multiplied with 158. Abnormal loss with 158. Transfer to next process with 158. Cost of sales also 158. But sales can't be 158. Sales selling price is given. How much is the selling price? 190. Selling price is 190. So multiply with 190. Multiply with 190. If you multiply, this is called responsibility center. This is called responsibility center. If you multiply with 190, unfortunately, amounts are not tallying. That's because two P and L, 6,400 units. In this, I earned 190 minus 158. This is my profit. 190 price, 158 cost. 190 minus 158. 190 minus 158. This is technically called as responsibility center accounting. Responsibility center accounting. 190 minus 158. 190 minus 158. The profit per unit is 32 rupees. The profit per unit is 32 rupees, and both the sides got tallied. Both the sides got tallied. Clear? This is called as responsibility center and non-responsibility center accounting. If it's a responsibility center, record sales, record profit. Not a responsibility center, record cost of sales, go to the P&L. Cost of sales will go to the debit side of P&L. Sales will be recorded in the credit side of P&L. Sales will be recorded in the credit side of P&L. Any doubts till this? Now I'm going to explain normal loss, and abnormal gain accounting, which you need not write. Just be in listen mode. Very simple analysis. If you see here in process P, I have processed 10,000 units. I have processed 10,000 units, but I got only 9,200, which means 800 is actual loss. 800 is actual loss in the first process. In the first process, 800 is actual loss. That can be broken down as 600 normal, 200 abnormal. 600 normal and 200 abnormal. There is a journal entry. Journal entry is very simple. Bank account debit. This entry alone, if you remember, that is sufficient. Bank account debit 800 into 5. Bank account debit 800, because you will sell the entire 800 units. Entire 800. 2. Normal loss 600 into 5. 2. Abnormal loss 200 into 5. 2 normal loss 600 into 5, and 2 abnormal loss 200 into 5. When it comes to process 2, I processed 6,900. I processed 6,900 and I got an output of 6,400, which means my actual loss is 500 units. Actual loss is 500. I processed 6900 and got an output of 6400. Got an output of 6400. Actual output is, sorry, actual loss is 500. How I can say 500 now as 500 can be broken down as, what was the normal loss in this process? 690. Abnormal gain minus 190. Abnormal gain is minus 190. Technical entries, bank account debit 500 into The realizable value for the second process is 8, 2. Normal loss 690 into 8, 2. Abnormal gain negative. I cannot write negative, so it will go to the debit side. It will go to the debit side. I cannot write negative amount in the journal entry. I am going to sell what? Actual loss. I am going to sell actual loss. Once you sell this, if you do posting of this in the account will look like this. See, whatever journal entry I said, abnormal loss, this you would have written in the process account. This you would have written in the process account. This comes from the journal entry. This comes from the journal entry. By bank account. By bank account comes from the journal entry. By costing P&L is balancing figure. By costing P&L is balancing figure. Similarly, this entry comes from the process. This entry comes from the process account. This should be not to bank account. Sorry, there's a mistake here. To normal loss account. To normal loss account. If you look at the journal entry said bank account debit, abnormal gain account debit to normal loss. To normal loss. And the net amount will go to P&L. Net amount will go to P&L. Now, if you see in the solution, just give me a minute. In the solution, sales is recorded here. In one process, I told not to record it because I changed the problem. So sales you record here, cost of sales you record here. To process one, you would have written by cost of sales in your notebook 239, 200. Second process, you wouldn't have written cost of sales. We directly recorded the sales and directly the profit will come. Directly the profit will come, which is the gap between sales and cost of sales. One important point is if P&L alone is asked and they don't ask abnormal loss or abnormal gain, net abnormal loss or net abnormal gain is equal to whatever units into cost price minus realizable value. For example, process 1 cost price was 104. Cost price was 104. Realizable value is 5 rupees. Realizable value is 5 rupees. So my net abnormal loss is 200 into 99. 200 into 99, which is 104 minus 5. 104 minus 5. And similarly, abnormal gain, cost per good unit was I think 158. Realizable value is 8. Realizable value is 8. Gap is 150. 150 into 190. 150 into 190. Understand the journal entry again. Very simple. Find out the actual loss. What is the actual loss? What you process and what you get. What you process and what you get. The gap is called actual loss, which can be broken down as normal loss, abnormal loss, or normal loss and negative abnormal gain. Negative abnormal gain. Journal entry for sale of scrap is bank account debit. You receive money to normal loss account to abnormal loss account. In case you have abnormal gain, negative amount, so I debit it. I debit it, and the net amount will go to P&L. Net amount will go to P&L. So this is double entry posting. I recognize it from the process account. From the process account, and then I sell the actual loss. I sell the actual loss, and net amount will go to costing P&L, which is cost price minus realizable value. Cost price minus realizable value. Clear? Any doubts in this? Any doubts in this? And in case I have sales entry and it's a responsibility center, not a responsibility center, to accounting. Responsibility center records sales in the credit side, which is what you did in the second process, and recognize profit in the debit side, which is units into selling price minus cost price. Units into selling price minus cost price. If it's not a responsibility center, units sold into cost per good unit is called as cost of sales, and sales and cost of sales will be recorded in my P&L account. Will be recorded in P&L account. Okay. There can be some question where they will talk about a term called normal loss, and in the normal loss they'll give two types of normal loss. One is called weight loss, second is called scrap loss. If they give you two numbers, only thing is weight loss cannot have any realizable value. What is weight loss? Is you're not able to see it itself. You're not able to see the product itself. Scrap means you're able to physically see and sell it. You're able to physically see and sell it. So in normal loss, I can have two types of normal loss in a rare situation. One is called weight loss. Weight loss cannot have any realizable value because you cannot see it. Petrol evaporation is called weight loss. You cannot see it. That's all. There is no realizable value. But if I'm using some steel and all, some scrap arises, that scrap can have a realizable value. That scrap can, if the question says realizable value is 20 rupees, it's only for the scrap component and not for the weight loss component, not for the weight loss component. Next is we come to a concept of equivalent units. Equivalent units comes into picture whenever a question gives data on degree of completion, or it says two-third completed, one-third completed, three-fourth completed, which means it's a work in progress. To value the work in progress, I'll have to convert the partially completed units. Partially means 40% complete, 60% complete, 80% complete into fully completed units using this calculation. Number of units into degree of completion. Number of units into degree of completion. We technically have four types of question. FIFO method 1 material, FIFO method 2 material, weighted average cost 1 material, weighted average cost 2 material. In that FIFO method 1 material, I'll do detail. 2 material, when I do some changes in steps. Weighted average cost 1 material, again some changes in step. Weighted average cost 2 material, again some changes in step. FIFO method 1 material is what is very critical for us to understand. I will explain the steps as I do the question. Let's come to question 3. The heading says FIFO method 1 material. Don't worry about the heading which is given there, because in an exam situation it will not come. How to identify, I'll explain as we proceed. Following details are related to the work done in process A during the month of March 2007. Opening work in process. Opening work in process. 2000 units. Material full work done. Material full work done. Labor 75% done. Overhead 70. If all the three are 100% done, it is a complete product. It is only 100, 75 and 75. In the current year, we will do the balance work. We will do the balance work. Material introduced, direct labor, overheads, unit scrapped. What is unit scrapped? Is normal loss plus abnormal loss minus abnormal gain. Unit scrapped is actual loss. Actual loss is nothing but normal loss plus abnormal loss minus abnormal gain. For the unit scrapped, I have a degree of completion. For the unit scrapped, I have a degree of completion. That is, whatever defective I find, I can find it at some stage. So this I have found it at the last stage. That is 100% material cost spent and labor and overhead 80% spent. Closing work in progress is there and actual output. Normal loss is 5% of total input. 5% of total input. Normal loss can be a percentage of input, total input, process production, actual output, or anything the question gives. Here it is given 5% of total input with a realizable value. We are required to do all the statement of equivalent production cost, distribution of cost, process A account, normal loss account, abnormal loss account. All this is straightforward, simple calculation. What we will first do is open the process account. Open the process account. In the debit side, when you open, if you find multiple entry for material expenses, it will become 2 material, 3 material, 4 material problem. Otherwise, it's a 1 material problem. Open process A account. Open process A account. Process A account. Particulars units amount. Particulars units amount. Process A account. To opening WIP. To opening WIP, we'll write the debit side first fully. To opening WIP, 2000 units, 1,40,000 rupees. To opening WIP, 2000 units, 1,40,000 rupees. And two various expenses which are given. They have given to material cost. Material cost 38,000, 14 lakh 80. 38,000 and 14 lakh 80. 38,000 and 14 lakh 80. To labor cost to labor cost 359 to labor cost 359 to overhead cost 1077 to overhead cost is 10,77,000. I've recorded various expenses which are there in the debit side of P&L. Various expenses which are there in the debit side of technically P&L or process account. Technically, it's like a P&L, but name is called process account. Any doubts on this? Clear? Now, is the only one entry for material cost. It's a single material problem. You will see later on 2, 3 entries for material cost. Main material, sundry material. Like the first question we did here. Raw material to process one account to sundry material. This is a two material problem. This is like a two material problem, but it was non-equivalent unit, so I did not get into this discussion. Now, once this is done, I identify whether it's a one material problem or a material problem. This is a one material problem. Second step you are not going to do, you're just going to listen, which is input output statement. I don't want you to repeat the input output part. We have already done two questions, you will understand it now. In the question, we will read and write these values. We'll read and write these values, but I don't want you to do the input output statement. What is the opening stock given in the question? Opening stock is 2000. Opening stock is 2000 units. Input 38,000. Total input 40,000. Closing stock 2,000. Processed production 38,000. Normal losses 5 percentage of total input. Normal losses 5 percentage of total input, which is into 5%, 2,000. Expected output 36. Expected output is 36. Actual output is 35,000. Abnormal loss 1,000. And anyway, this was directly given in the question. The question said units scrapped is 3,000, which is normal plus abnormal. Normal plus abnormal. So I will do an input output statement which will tell me how much is the abnormal loss or abnormal gain and normal loss. Any doubts on this? This is self-explanatory. In this step, one extra item we add. This is called units started and completed. The importance of this you'll understand in the next working note. What is unit started and completed is those units. How many units have completed is this? These are completed units. In this completed units, some were started in the previous year. Some were started in the previous year. That's called opening WIP. So from what you completed, deduct the opening WIP. From what you have completed, deduct the opening WIP. You will get units started and completed. You will get units started and completed. So from this 35,000, I subtract closing work in progress 2,000. Will get 33,000. These are units which are started as well as completed in the current year. Started as well as completed in the current year. Any doubts on this? Then working note 3. Write working note 3. Statement of equivalent units. Statement of equivalent units. Statement of equivalent units. Particulars. Units. Whatever expenses we have in a question. In this question, we have three expenses: material, labor, and overheads. So for these three, we'll have two subcolumns: material, DOC, equivalent units; labor, DOC, equivalent units; overheads, DOC, equivalent units. Particulars units, material, labor, overheads with degree of completion and equivalent units. Degree of completion and equivalent units. Once these steps are understood properly, balance will become very simple, just a formality. These steps you will have to understand it clearly. Now, first we will reconcile the units again here. First item is called further work on opening WIP, right, as it is. Further work on opening WIP. Further work on opening WIP. How many units of opening WIP in the question? 2000. We will write other items later. Further work on opening WIP. Units started and completed 33,000. Units started and completed 33,000. Normal loss. How many units is normal loss? 2000. Abnormal loss. This question it's not there, but you just write abnormal gain, negative triplex. Negative triplex means negative units. Abnormal gain, if you have, you will be writing negative units. Abnormal gain, negative units. And closing WIP. Closing WIP, how much? 2000. Total will have to match total input of the input output statement. This has to match total input. This has to match total input of the input output statement step. Total input of the input output step. So I have a total input of 40,000. 2,000 is opening WIP in that. 33,000 is started and completed. 2,000 got lost as normal. 1,000 got lost as abnormal. And 2,000 is staying as closing WIP. Any doubts in this? Now, rule listen. What we are trying to find is how much work did we do in the current year. So, listen. The rule is 100 minus given percentage. Given percentage, some degree of completion is given in the question. That is the work done in the previous year. That's the work done in the previous year. Extra work in the current year is called 100 minus given percentage. For example, material is given as 100. So this year extra work is 100 minus 100, 0%. This year extra work is 100 minus 100, 0%. Labor 75 is given. Extra is 100 minus 75. Extra is 100 minus 75. Overhead is 75 given. Extra is 100 minus 75. So first item, right? 100 minus given percentage in the side. 0%. 0%. 25% and 25%. Equivalent units I'll explain in some time. 0, 25, 25. 0, 25 and 25. What is 0? 100 minus 100. What is 25? 100 minus 75. And again 25 is 100 minus 75. Unit started and completed, self-explanatory. It started as well as completed in the current year. So entire 100% work done. 100% in all the three. Entire 100% work. Rule is 100%. Full work done in the current year. Full work done in the current year. Normal loss units do not form part of my denominator. So I remove it from the denominator. So technically they are 0. Technically they are 0. So degree of completion is 0% for normal loss. 0% for normal loss. Now, an abnormal loss can be identified anytime I want. I can identify it in step 1. That is moment I incur 10% cost. Sometimes I can identify after 50% cost. Sometimes I can identify after full work is done. Here, units have been scrapped after wasting 100% material cost, 80% labor. Units scrapped and degree of completion is 180. 180. So this rule is given percentage. Rule is given percentage. So 100% work you have done, 80% done, and 80% done. 100, 80, and 80. If nothing is given, then I'll take 100%, assuming defect is identified once everything is done. Once everything is done, I identify the defect. 100, 80, and 80. Abnormal gain means it is a fully completed unit. In question, not there. If it's there, it will be 100%. It will be 100%. So I'm writing 100%. Technically, in this question, it's not there. In this question, it is not there. 100%, 100%, and 100%. You would have written it. I'm removing it from my screen because I don't have the abnormal gain. But technically, it has a degree of completion of 100%. Closing WIP means Whatever work is done is called given percentage. Next year you will do 100 minus given, because next year it will become opening WIP. So the rule for this is given percentage. The rule for this is given, and question has said closing work in progress also 180. Closing work in progress is also 100 percentage and 80 percentage. So 100, 80 and 80. Now your job is nothing but multiply units with the degree of completion. Units with the degree of completion. You will keep multiplying units with the degree of completion. Units with the degree of completion. Please do only material cost. Others I don't want you to do, because you will waste time there. I just want you to understand the concept. So units with the degree of completion, put a total. Other two you can see in the screen. One I want you to close it so that you understand the working. Balance you leave space, later on you can fill it also. This is one of the requirement of the question, statement of equivalent production. Statement of equivalent production, first requirement of the question. I have done it as working note 3. I have done this as working note 3. Any doubts on this? Clear? Next, working note 4 is statement of cost per unit. Statement of cost per unit, particulars, material, labor, overhead. Whatever cost we incur, we'll have to write it. Material, labor and overhead. The amounts for this will come from the debit side of the process account. The amounts for this will come from the debit side of the process account or from the question. Cost incurred. Look at your debit side of the process account and tell me what is the material cost incurred. 14 lakh 80,000, right? 14 lakh 80. Labor cost 3 lakh 59. Overhead cost 10 lakh 77. 359, 1077 and 1480. 1480, 359 and 1077. This is there in the debit side of the process account, right? Cost incurred 1480, 359 and 1077. From the cost incurred, we subtract sale value of normal loss. Like we were doing cost per good unit, we were subtracting. Here also we subtract. Normal loss is 2000 units. Realizable value given in the question is 20 rupees per unit. Given in the question is 20 per unit. So sale value of normal loss is 2000 into 20. 2000 into 20. I subtract it only from material cost. I subtract it only from material cost. So 2000 into 20 minus 40. Minus 40. Net cost incurred. Net cost incurred 1440, 359, 1077. Equivalent units, cost per equivalent unit. Equivalent units is earliest step, 36,000. You can write 35,900 in your notebook. It may not be there, but you can write 36, 35,900 and 35,900, and we get 40 rupees, 10 and 30. If it's in decimal, I'll do 4 decimal to avoid the rounding of gap. 40, 10 and 30. This is technically in the question statement of cost. Statement of cost. Any doubts on this? Clear? Then working note 5. Statement of distribution of cost slash valuation. Question has used the term distribution of cost. Some question may use the term valuation. Statement of distribution of cost slash valuation. Now this is a very simple step. Copy paste particulars, material, labor, overhead and a total. Material, labor, overhead and total. This step fully you may not be able to do, because in your notebook I have not told you to write certain items. What we do is I copy paste the items from here. I copy paste the items from here and I'm going to value all this. Further work on opening WIP, unit started and completed. Normal loss no need to write, that's already valued. Normal loss leave it. Abnormal loss you write it. Closing WIP you write it, and total. further work on opening WIP, unit started and completed, abnormal loss, closing WIP. Now, what this step means is assuming you have this in your notebook, okay? What you will do is you will take 0 and multiply with 40 rupees. Material cost is 40. Then 33,000 with 40 rupees. The order could be different for us and here. Then 2,000 into 40. 1,000 into 40. 500 into 10. 33,000 into 10. 1,600 into 10. 800 into 10. 500 into 30. 33,000 into 30. 1,600 into 30. 800 into 30. Take the units from there and multiply with the cost per unit, which is 40, 10 and 30. Now I am doing it here. Further work on opening WIP. 0 was there into 40. 0 into 40. This step you be in listen mode. Format you write it, but be in listen mode. I have taken the units from there, multiplied with 40 rupees. Multiplied with 40 rupees. Again I take the units, multiply with 10 rupees. Multiply with 10 rupees. Again I take the units, multiply with 30 rupees. Multiply with 30 rupees. And we put a row wise total as well as a column wise total. The column wise total has to match net cost incurred. Listen, this is otherwise called as distribution of cost. What we are doing is this cost of 14 lakh 40 I distribute to opening WIP, unit started and completed, abnormal loss and closing WIP. That 14 lakh 40 is distributed to various items. Distributed to various items. 3 lakh 59 distributed to various items. 10 lakh 77 distributed to various items. Clear? Any doubts on this? So this you would have written particulars, material, labor, overheads total, various items total. Filling part you will do it later. What you do? Take the units from there, cost per unit from here and do multiplication. Units from one place, cost per unit from the other place and do multiplication. Any doubts on this? Any doubts on this? Now at the end of it, one item I want is transfer to next process. What I transfer to next process is whatever I complete fully. Whatever I complete fully. And what I complete fully is units started and completed and the opening WIP and the opening WIP. So transfer to next process is equal to write opening WIP plus units started and completed. Please write. Transfer to next process is equal to opening WIP plus units started and completed. Opening WIP plus units started and completed. The opening WIP will have two components. One value is given in the question and one value we have calculated. Extra work we have calculated. Last year work is 1 lakh 40,000. Last year work is 1 lakh 40,000. Extra work is further work 20,000. Further work is 20,000 and unit started is 2640. All put together. What's the value of all of this put together? Now, all these items will go to the credit side of the process account. So, it's a lengthy area, can't help it. Some exam question may ask only statement of equivalent units or statement of cost per unit. Statement of equivalent units and statement of cost per unit. They may not ask everything. Some question may say do till valuation and some may ask the process account also. If process account is asked, 5 steps you have to do. First step, debit side of the process account. Credit side we have to fill now. Credit side we have to fill now. Input output statement. In that I calculate an item called units started and completed. Then we do statement of equivalent units where we have certain rules. Rules is opening WIP 100 minus given, closing WIP given, units started and completed full 100% work, normal losses 0, abnormal losses given, abnormal gain is 100% with units being negative. With units being negative. Then from there on, we move to statement of cost per unit. Debit side amounts you write, deduct the sale value of normal loss, net cost incurred, get the cost per unit and do the multiplication. Now listen, how my process account will close is in the credit side. In my printed material, sometimes the order could be I do process in the end or I do it in the beginning. That doesn't really matter. Normal loss 2000. Value for normal loss is 2000 into 20. Abnormal loss value comes from here 72,000. Abnormal loss value comes from here. Closing WIP value comes from here. Transfer to next process value comes from here. So normal loss, closing WIP, transfer to next process, and both the sides will tally. Both the sides will. Debit side will come from the question. Credit side will come from valuation. Credit side will come from valuation step. Clear? Any doubts on this? I'll repeat the steps here. First, I open a process account. Then I do input output statement. In this, I calculate units started and completed. I calculate units started and completed, which is actual output minus the opening WIP. Then we do statement of equivalent units, where this is the rule. Further work 100 minus given, units started and completed 100%, normal loss 0%, abnormal loss given percentage, abnormal gain 100%, and closing WIP given. No need to remember, logic is very simple. Further means 100 minus, unit started and completed means full work is done. Normal loss obviously will not come. Abnormal loss depends on when you identify a scrap. Abnormal gain is a fully complete unit, so 100%, and closing WIP whatever is completed. Then I calculate cost incurred. This is from debit side of the process account. From the debit side of the process account, sale value of normal loss, net cost incurred, and I subtract equivalent units. In this, be very clear, sale value of normal loss is to be subtracted only from the material cost, only from the material cost. And then we do multiplication, equivalent units as per working note 3, cost per equivalent as per working note 4. Various items are valued and transfer to next process, opening WIP in the question. Further work on opening WIP as per your valuation, plus units started and completed, plus units started and completed. Any doubts in this? Yep. I'll take a 15 minutes break and then explain the other methods. Okay. What I did now is called FIFO. Guys, please. What we did is FIFO method and one material. Similar steps we are going to do for other situation. You will understand them. Let's come to question 4. From the following information for the month ending October 2005, prepare process account for process 3. Use FIFO method. When to use FIFO, when to use weighted average, also explain once I'm done with everything. Opening WIP, transfer from process 2, transfer to process 4, closing stock, unit scrap, direct material, direct wages, production overhead. What we will be doing is we'll first do the process account debit side. That will tell us whether it's a one material problem or a two material problem. Then I do an input output statement, no changes in that. 1 and 2, step 1, step 2 in all the 4 remains same. Let's start. Process account, open process account. Process account. Particulars, units amount, process 3 account they want us to prepare, process 3 accounts, particulars units amount, particulars units amount, process 3 account. The question has given certain items here. We'll have to keep writing them in the debit side. Once we write, you'll understand whether it's a single material problem or a two material problem. The heading says two material, but you will understand it only when we do the account. Two opening WIP. Two opening WIP. 2000 units, 25,750. 2000 units and 25,750. Two opening WIP 2000 and 25,750. Two process 53,000 units and 411,500. Whatever entries has to come in debit side. 53,000, 411,500. Two process 2, 53,000 and 411,500. to process 2, then 2 direct material, 2 direct material. How much the direct material expense? 197 600. 2 direct wages 97 600. 2 production overhead 48 800. 2 production overhead 48 800. Now, if I look at this question, this is one raw material expense and there is another raw material expense. So, to process 2 is called main raw material and the other direct material is called sundry raw material. That is called as our material 1 and material 2. It's a two material problem. It is a two material problem. You see two entries for material cost. 2 process 2, that is one material cost, and second entry is 2 direct material. Second entry is 2 direct material. This is technically called as a two material problem. Now, what changes happen in two material? We'll have to see. Any doubts first on this? How to identify one material versus two material? Here, two process 2 is there and two direct material is there. Two direct material is there. Step 2, you will not be doing it, which is your input output statement, which I'll do it, and then other steps you will do along with me. Input output statement. Opening stock given in the question is 2000 units. Opening stock is 2000. Input is 53,000. Total input 55,000. Closing stock is 5,000. Processed production 50. Normal loss given in the question is 5% of production. Production means 5% of processed production. 5% of processed production. It says 5% of production, which is 5% of processed production. Expected output 47,500. Expected 47 is the actual output there in the question. 48,000. Abnormal gain, which is 500. Abnormal gain is 500, and unit started and completed is what I transferred 48,000 minus opening stock. 46,000 is unit started and completed. 46,000 is unit started and completed. Unit started and completed is transfer to next process minus the opening work in progress. No changes in these steps. In fact, in this question, ideally they should not have given this number. I could have worked with this also. Unit scrap 2000 means normal loss 2500, abnormal gain 500, because loss is lesser than 2500. Loss is lesser than 2500. Normal loss is 2500. Abnormal gain is 500. Output is balancing figure. Output is balancing figure. Now, after this step, I have to do statement of equivalent units. Working note 3, right? Statement of equivalent units. Statement of equivalent units. Now, for every expense, I will need a column. So, listen, particulars units, material 1, material 2, labor, overhead. Material 1, material 2, labor and overhead. Material 1 is the main raw material. Material 2 is the sundry material. So, particulars units, material 1 or material A, you can give any name to it. Material A, DOC equivalent units. Material B, DOC equivalent units. Labor, DOC equivalent units. Overheads, DOC equivalent units. Particulars units. Material A, material B, labor and overheads. Material A, material B, labor and overheads. Degree of completion and equivalent units. Same logic we are going to do. We are going to first close out on the units part, total units, where first item is further work on opening WIP. Further work on opening WIP, which is 2000 units. Further work on opening WIP 2000. units started and completed 46,000. We have to reconcile the total input. We have to reconcile the total input. Closing WIP 5,000. Normal loss 2,500. These numbers you may not have because you did not do the earlier step, but these are the values. Normal loss 2,500. Abnormal gain is negative 500. Total. This has to match total input. Steps remain same. Just small subtle changes I'll be doing, that's all. 55,000, which is the total input. Now listen, everything remains same. Further work on opening WIP rule is 100 minus given percentage. Unit started and completed 100 percentage. Closing work in progress given percentage. Normal loss 0 percentage. Abnormal gain given 100%. 100%. Only change you have to do is material A. You should never look at the question. People make a mistake of looking at the question. So listen, material A is everything is 100%. Material A rule is everything is 100%. Some changes I'll explain. Material A rule is always 100%. So opening WIP will be 100 minus 100 0. 100 minus 100 0. Material A is always 100% complete, which means when it came as opening WIP, it was always fully complete. So here this is 0. This is 0. Everything else is 100%. Normal loss will obviously be 0 and opening WIP is also 0. Everything else, don't look at the question. Don't look at the question. Material A, there is some degree of completion given for material, that is material B. Don't look at the question and write the numbers. Material degree of completion is given in the problem. I should not check that. I should not check that. Material A, all 100% except normal loss and opening WIP, except normal loss and opening WIP. Write this 0 and 0 and others. Total is 5,500. I did not look at the question and I don't want to look at the question also, because if I look at the question, I'll make a mistake. So I should never look at the question for material A. Material A, degree of completion. Please don't look at the problem. The moment you look at the problem, your mind will force you to make a mistake. How was the mistake made? You'll understand when I do material B, labor and overheads. Material A rule is 100% except normal loss, which is obviously 0%, and opening WIP and opening WIP. Now tell me in the question, what is the degree of completion given for opening stock? 80, 60 and 60. Balance I'll write 20, 40 and 40. Balance I'll write 20, 40 and 40. Material A, don't look at. Material A, don't look at. Moment you look at, you'll unnecessarily make a mistake. Material A, never look at the question. Material A, never look at the question. Material A rule is very simple. Opening WIP 0%, normal loss 0%, everything else is 100% because it's complete and come to me. It has come from the previous process. So this is 20, 40 and 40. What is 20, 40 and 40? 100 minus 80, 100 minus 60 and 100 minus 60. Let's not worry about the equivalent units part, okay? Let's not worry about equivalent units. No need to focus on writing that. Equivalent units is just multiplication. 20, 40 and 40. Any doubts on this? Unit started and completed 100%. All 100%. Unit started and completed all 100%. Closing work in progress, all given percentage except material A. Material A, never look at the question. Material A, never look at the question. We make a mistake of looking at the question and write wrong numbers. Closing stock, you can please write the degree of completion, EU and all later you will do. So, closing stock is 70, 50 and 50. That 70 is for material B only. Material B only. So, 70%, 50% and 50%. Normal loss rule is 0, 0 and 0. Abnormal gain rule is 100%, 100%, 100%. There is some degree of completion given for unit scrap, no use. That is needed for abnormal loss. that is needed for abnormal loss. Any doubts on this? Clear? I don't want you to write the equivalent units, but the calculation is, I'm doing it in Excel quickly. So material B total is, just give me a minute, 49,400. Material B total is 49,400. Then this is 48,800. Same 48,800 will come for over it. Let's not worry about the calculation part of it. Understand the steps. Material A alone as per predetermined rule. Material A alone is as per predetermined rule. This is the first change between one material and two material. Between one material and two material, this is one change which you have to do, because you have to bring material A column, and for that the degree of completion is as per a predetermined rule. Clear? Then I'll be doing statement of cost per unit. Write it. Statement of cost per unit. Statement of cost per unit. Now it will be particulars, material A, material B, labor, overhead. Material A, material B, labor and overhead. Earlier it was only material, now it is material A and material B, or material 1 and material 2, whatever name you wanna give. Material A, material B. I have been telling you to leave space so that you can fill the space later, because that will guide you to solve the question once fully, and then without the steps you can do it separately also. But leaving space will help you in closing out the question later. Here cost incurred less sale value of normal loss, right, net cost incurred, equivalent units, cost per equivalent unit, cost per equivalent unit, cost incurred, sale value of normal loss, net cost incurred, equivalent units, and cost per equivalent unit. Cost per equivalent unit. Cost incurred is there in the debit side of your process account. Tell me, material A, what is the cost incurred? Material A. Material B, 197, 600. Labor, 97. Overhead. One change which happens is sale value of normal loss is subtracted only from material A. Earlier I said material, but now you have material A, material B. So sale value of normal loss, 2,500 units into 3 rupees. 2,500 into 3 rupees is subtracted only from material A. This is the next change. Next change is subtracted only from material A. Can I do it in material B? Logically you can distribute. For simplicity's sake, they say just take it from the main raw material. Just take it from the main raw material. So 2,500 into 3. 2,500 into 3. Normal loss is 2,500 units, and the realizable value given in the question is 3 rupees per unit. Scrap is 3 rupees per unit. Net cost incurred. Get the units from the earlier working note. 5,500. 49,400, 48,800, 48,800, 84,211, 84,211. It may come as rounded off numbers also. Here we are getting proper numbers, but it may come in decimals also. 84,211. Cost per equivalent unit, 84,211. So two changes we have done. One change we did is material A and material B. And the second change is in the step sale value of normal loss subtract from material A. Working note 5, which you are not going to do, or okay, you can leave space for doing this. Statement of distribution is very simple. I'll copy paste the same thing. Copy paste the various items. Further work on opening WIP, units started and completed, closing WIP, normal loss will not come. And material A, material B, labor, overheads, total. You can just write this. Units you will take it from there. Cost per unit will take it from here and keep multiplication. Keep multiplication. Take the units from there and cost per unit from here. Write the format. Particulars, material A, material B, labor, overheads and total. And the various items come from there. In this, abnormal gain will be negative value. You will write it as negative and then record it in the debit side in the end. Material A, material B, labor, overheads and total. Various items. What you need to do is take the units from working note 3, cost per unit from working note 4 and keep doing multiplication. Keep doing multiplication. How will I do it this? Had the statement with me 0 into 8, 46,000 into 8, 5,000 into 8, 0 into 8, normal loss leave it, minus 500 into 8, minus 500 into 8. Then 400 into 4, 46,000 into 4, 3,500 into 4, negative 500 into 4. Then 800 into 2, 46,000 into 2, 2,500 into 2, negative 500 into 2. Then 800 into 1, 46,000 into 1, 2,500 into 1, negative 500 into 1. It may look time consuming, but once this is done, see there is a check here. This has to match. There is a check at total input. So mistakes making is very limited here. Once you are done, you will do transfer to next process, which is two items: opening WIP plus unit started and completed. One value is given in the question, one value you have calculated and then completed. So steps remain similar, two changes alone. Two changes alone. I have not been doing this step because I have told you will do multiplication and then keep closing. And whatever you wrote here, abnormal gain will go to debit side of process account. Closing WIP will go to credit side of process account. Transfer to next process will go to credit side of process account. Normal loss will go to credit side of process account. And my process account will tally. Process account will tally. All these figures are coming from that step. All these figures are coming from the below step, which is there. Clear? Any doubts on this? Any doubts on this part? So, in two material, FIFO method and two material, following changes. Step 1, no change. Step 2, no change. Step 3, main material is called as material A, allied material is called as material B. Main materials are material 1, material 2. The question may use a different name also. Equivalent units will have to be computed for material A and material B. Degree of completion for material B will be as per question. For material A, opening WIP and normal loss 0%. Everything else take 100%. Everything else take 100%. It is as per a predetermined rule. Don't look at the question for material A. Many students make a mistake of looking at the question. Sale value of normal loss is to be subtracted from material A. These are the changes. These are the changes. Do multiplication and close. Now we have done till FIFO method. Now I'll be moving to weighted average method. Same 5 steps with certain changes here and there. Let's move to next question. Any doubts on this? Any doubts on one material to two material? Only two changes. Step 3 there is a change and step 4 there is a change. Average cost heading says when to use average cost, when to use FIFO method. Once I'm done with this segment, I'll explain it. As demand for LED light increases, more entrepreneurs are coming into the manufacturing process. Okay, the first para is of just a background. Let's look at the data. The details relating to the first process of mounting for the month of August is given below. Opening work in process. Opening work in process. So there is a work in process means it's an equivalent unit question. 31,000, and in this opening work in process, what they have done is they have told material cost is how much, labor cost is how much, overhead cost is how much. Where does this come from? Last year, statement of valuation. You'll have material separately, labor separately, overhead separately. We used to add all the three and write it as closing work in progress. Here they have given that breakup. This breakup is needed. Why needed? You will understand. This breakup is needed. They have told. So opening WIP, can you tell me the total of the three? Opening WIP, what is the total of the three? Tell. 21 lakh. So opening WIP you will be writing 31,000 2170. Opening WIP is 31,000 and 2170. Introduction during the process, material cost, labor cost and overhead cost. The process involves some wastage. The process involves some wastage. Management estimated a normal loss of 5% of total input. 5% of total input, including the opening work in progress. However, the workers reported 46,500 units are scrapped. We have scrapped 46,500 units, in which 100% material is done, 80% labor and overhead is done. 540 to 500 units were transferred to the next process. Some units are still in process. Some units are still in process. The shifted for the next month process with 100% material and 80% labor. The closing WIP is 31,000. The closing WIP is 31,000. You are required to prepare statement of cost showing cost per equivalent unit. This is technically step 4. Cost per equivalent unit is step 4. Distribution of cost is step 5. Now, process account is step 1. Normal loss and abnormal loss account, I am not going to do. Normal loss and abnormal loss, we are not going to do. So, here in weighted average cost method, again, small changes will happen. Step 1, step 2 remains same. Let's write step 1. Let's write the process account. Let's write the process account. You will write along with me. Process account. Process account. Mounting process account. The name they have given, mounting process. Mounting process account. In this question, the numbers are slightly heavy, so it will take more time to do the calculation. Anyway, in Excel it will not matter, but when you do, it will take more time. Mounting process account, to opening WIP. To opening WIP, 31,000 units. 31,000 units and values 21 lakh 70. Values 21 lakh 70. 31,000 units, values 21 lakh. So what is 2170? Material plus labor plus overhead. Material plus labor plus overhead. 2170. 2. Material cost 5 lakh 89,000. 5 lakh 89,000 units. 2 crore 29 lakh 40,000. 2 crore 29 lakh 40,000. To material cost 589, 229 40. To labor cost 55 64 500. Labor cost 55 64 500. To overhead cost, to overhead cost 166 93 500. 166 93 500. How many entries do you see for material cost here? 1 entry or 2 entry? Participate. It's only 1 entry, it's not 2 entry. 2 entry means 2 material, 2 sundry material. Opening WIP is not a material cost. Opening WIP has all the 3. So there is only 1 material. This is a 1 material problem, average cost. 1 material problem, average cost. After this is done, this is my second statement, which I'm not doing it. I'm going to quickly show it here. Opening WIP is given in the question. Input is there. Total input. Closing WIP is given in the question. Normal loss is 5% of total input. Normal loss is 5% of total input. Expected output, actual is given in the question. There is abnormal loss of 15,500. There is abnormal loss of 15,500. I am not really bothered about all this calculation. If I am following average cost method, I don't want this unit started and completed, because in FIFO method, if you have done your materials chapter in that, if you have done that PSL, in FIFO method, I do lot wise tracking. 1 lot, 2 lot, 3 lot, we write it separately. Average cost doesn't have the concept of lot wise. So it clubs everything together. It doesn't matter whether it came from the last year or whether it came from the current year. So the first change is I don't need unit started and completed. I don't need unit started and completed. This is one change which happens in average cost method. I'll summarize the changes once I'm done because it's there in the concept book. So the first change is I don't need units started and completed. Clear? Next, working note 3, statement of equivalent units. Statement of equivalent units, particulars units, material labor overheads. Particulars units, material labor overheads. Particulars units, material labor. You write the format, I'll be writing some items, balance you'll be filling later. Particulars units, material labor and overheads. Material labor and overheads. Now, in this, I don't write opening WIP. I also don't write units started and completed. I give a name, transfer to next process directly. Transfer to no concept of writing separately and all. We don't write separately opening WIP, separately units started and completed. Just club it and write transfer to next process, which in the question was 542 500. Transfer to next process 542 500. 540 to 500. No concept of writing opening WIP, unit started and completed. Then closing WIP is 31,000. Normal loss 31,000. Abnormal loss 15,500. Again, it has to match total input. Again, it has to match total input. The only change is no point of writing separately. Separately, we will not write. What we write separately? Unit started and completed, and opening WIP, we used to write it separately. That is not needed under average cost method. Why average cost? Once I'm done with the next question, I'll explain why we are doing average cost and why we do the other method. That clarity you will get in just some time. Now, closing WIP. What was the rule earlier? Closing WIP. What rule I said? Degree of completion. Participate. Given percentage. Same rule works here. Normal loss I said 0% works here. Abnormal loss I said given percentage works here. Transfer to next process is 100% because it's a completed unit. It is a completed unit. So write 100%, 100% and 100%. Transfer to next process is it's a complete product. It is a completed product. I'm writing 100%. I'm writing 100%. Closing WIP rule remains same. Given percentage, question has given it as 100% for material, 80% for labor and overheads. 80%. At home later on, you can check all this calculation if you want or read the question in detail and all. 100, 80, 80, 180 and 80. Normal loss rule remains same. 0, 0 and 0. Normal loss rule remains same. 0% for all the three. Abnormal loss given percentage, which again the question said you scrapped it at 180. You scrapped it by incurring 100% of material and 80% of labor and overhead. You need not write this equivalent units and all, but this you will leave space to fill it later. I get my equivalent units. I get my equivalent units. Only changes, no need to write units started and completed. No need to write opening WIP. No need to do both of them. Any doubts on this? Step 4, major change will happen here. Working note 4, right? Working note 4, statement of cost per unit. Cost per unit. Particulars, material, labor, overhead cost. Material, labor and overhead. Material, labor and overheads. Material, labor and overheads. First item we write is opening work in progress, because under average cost method, if you remember when I did cost sheet, valuation of closing stock, when we did, the formula was cost of production plus the opening stock divided by units produced plus the opening stock. So under average cost method, opening stock is also considered for cost per unit calculation. That is where that breakup was given in the question. In the question, you see material how much, labor how much, and overhead how much. Breakup is given, right? Opening work in progress from the question, right? 1240, 232, 500, 697, 500. 1240, 232, 500, 697, 500. Current period cost 2 crore 29 lakh 40,000, 55 64 500, and 166 93 500. Current period cost. Opening work in progress is to be considered under average cost method. Opening work in progress is to be considered under average cost method. Any doubts on this? Clear? I consider first opening WIP, current period cost, then remain same. Less sale value of normal loss, net cost incurred, equivalent units, cost per equivalent unit. Sale value of normal loss, net cost incurred. Every question same format. Format will not change in any question. Format is not going to change in any question. You decide out of the four which question it is. FIFO 1 material, FIFO 2 material, weighted average 1 material, weighted average 2 material. You decide the approach, same format, answer will automatically come. It's just more of calculation which need to be done. In this question, normal losses 31,000 units and realizable value given in the question is 20 per unit. Realizable value is 20 per unit. So 31,000 into 20. From material, net cost incurred, equivalent units, (40, 10, and 30). Cost per equivalent unit is 40, 10, and 30. Cost per equivalent unit is 40 rupees, 10 rupees, and 30 rupees. Clear? Now, next step we are not doing. Take the units from one step. So you can write the format. Step working note 5. Statement of valuation. Particulars, material, labor, overheads, total. Material, labor, overheads, and total. And copy paste items from this step. Copy paste the items from this step. Take units from there, cost per unit from here, and keep doing multiplication. One good part about weighted averages, transfer to next process is directly calculated. No need to add those items. No need to add those item. Transfer to next process is automatically calculated as one of the line item. Transfer to next process is automatically calculated as one of the line items. Clear? Any doubts on this? Any doubts on this? Done? Now, if I look at the question, I will do that multiplication. When I do multiplication, again, this will match my net cost. Sorry, in this case, okay, by mistake, I've added normal loss also here. If I don't add normal loss, it will match the net cost incurred. Again, it will match the net cost incurred. By mistake, I've added the normal loss because normal loss valuation is not needed. And my process account, all figures will come from here. Whatever valuation you do, all figures will directly come from here. Any doubts on this? So under average cost method, look at the changes. No change. Unit started and completed is not needed. Further work on opening WIP and unit started and completed is replaced with transfer to next process. Is replaced with transfer to next process. Degree of completion will be 100%. Opening WIP will be considered in cost per unit calculation. Now listen, if a question gives the breakup of opening WIP. What is breakup is how much is material. The last two question we did, the breakup was not there. If breakup is there, average cost is possible. If breakup is there, average cost is possible. The question which we just did, FIFO is not possible. For FIFO, you need degree of completion of opening stock. In this question, I did not ask you 100 minus given, 100 minus given. I did not ask because it's not given. Given degree for opening WIP, the DOC is not given in the question. For opening WIP, the degree of completion is not given in the question. So the rule is this: if the breakup of opening WIP is available, if the breakup of opening WIP is available, then we can follow average cost method. Then we can follow average cost method. If the degree of completion, if the degree of completion of opening WIP is available, then you can follow FIFO. Because for FIFO method, when I do step 3, I want 100 minus given. If given is not there, I cannot follow it. And for average cost method, I need opening WIP breakup in step 4. I need opening WIP breakup in step 4. If these are available, both are available, either of the method, or follow whatever the question says. Question says FIFO, follow FIFO. Question says average cost, follow average cost. For example, in this question, the name of the method I think is not okay. They have told average method, but if the name of the method was missing, then I will look at the data. I'll look at the data. Opening work in progress breakup is there. You can follow average cost method. Degree of completion is there. You can follow FIFO method. Clear? Any doubts on this? The last situation, I'm not going to do a problem, but I'll quickly explain it. Simple rule. From FIFO 1 material, when we move to FIFO 2 material, we made certain changes. The same set of changes I have to do from situation 3 to situation 4. What is situation 3? Situation 3 has said process account no change and unit started and completed is not needed. Step 3, further work on opening WIP and unit started and completed is replaced with transfer to next process. When you go to situation 4, add material A, material B. Add material A column and material B column. Add material A and material B. Degree of completion for material A is 100% except normal loss. Opening WIP will not come. Anyway, opening WIP will not come except normal loss. Step 4, when you do cost per unit calculation, again write material A, material B and subtract sale value of normal loss from material A. Subtract sale value of normal loss from material A. So same changes. No change, no change. Main material will be called as material A and allied material equivalent units has to be computed for material A and material B. DOC for material B will be as per question. DOC for material A is 0% for normal loss. Everything else is 100%. Sale value of normal loss is to be deducted from material A, or it can be called as material 1 and material 2. Just to give you a view, this is how the question will say: material 1, material 2, wages, overhead. Because for average cost method, I need the breakup. I need the breakup. So they have given the breakup: material 1 so much, material 2 so much, labor so much, overhead so much. If they don't mention all this, you open the debit side of the process account to process 1 main material, 2 material, sundry material, main material and sundry material, material A, material B. In this question, they've used the term material 1, material 2. You can use any of the terms. You can use any of the terms. Clear? Any doubts on this? Any doubts on this? So FIFO method, I'll repeat, FIFO method, 1 material, process account, then I do input output statement, then I do units, then I do statement of equivalent units. In that, opening WIP is 100 minus given, unit started and completed is 100%, normal loss is 0, abnormal loss is given, abnormal gain is 100% with units being negative, and closing WIP is given. Step 4, cost per unit, particulars, material, labor, overheads, sale value of normal loss is to be subtracted from material column, get the cost per unit, multiply units from step 3, cost per unit from step 4. Take the units from there, cost per unit from here, and keep doing multiplication. Keep doing multiplication. In the end, transfer to next process is equal to opening WIP as per question, further work on opening WIP as per the step, plus units started and completed. From this, if you move to 2 material, In the debit side of the process account, you will see two material, again two material, two entries you will see. That's called two material problem. No change in step 1, no change in step 2. Step 3, material A, material B. Material B, labor overheads follow whatever I have told earlier. Material A, 100% for everything except normal loss and opening WIP. Step 4, when you do cost per unit, sale value of normal loss is to be deducted only from material A. Only from material A, do the multiplication completed. When you move to average cost method, step 1, no change. Step 2, I don't need units started and completed. Step 3, I don't write unit started and completed. I don't write opening WIP and call it as transfer to next process. Call it as transfer to next process with degree of completion being 100%. Step 4, when you do cost per unit, first line item is opening WIP, second line item is cost incurred, less sale value of normal loss, net cost incurred, and then you do multiplication and directly you will get transferred to next process. When you move from average cost 1 material to average cost 2 material, first imagine the changes for average cost, then imagine the changes for 2 material, then imagine the changes. What are the changes for 2 material? In step 3, I need material A, material B. Material A DOC is 100% except normal loss. In step 4, again I need material A, material B. Sale value of normal loss is to be subtracted only from material A. Only from material A. Clear? Any doubts on this? Okay. Question 7, which I would want you to 100% practice it. It is a reverse working question. It's a reverse working question. Here, what will happen is you will have to write all the 5 steps. You will have to write all the 5 steps. What are the 5 steps? You will write first process account, then you will write input output statement, then you will write statement of equivalent units, statement of cost per unit, and then you will write the valuation. Some data will be there, balance will be missing information. Balance will be missing information. So here question would have directly given cost per equivalent unit. Question would have directly given cost per equivalent unit, and you will keep reverse working and getting to the balance number. You will keep reverse working and getting to the balance number. This is a very good question, can be tested in exam. I will see, I have to do one more important concept. So first I will do that. If time permits, I'll solve this question. If time is not there, I'll not solve it. You can manage it, but I want to do one important concept because it comes in 1 and 2, 3 exams from process costing. This keeps coming, which is called inter-process profit. Inter-process profit. So I'll discuss that now. Okay, some rule on degree of completion. Some question will say this is for any of the method, that is step your FIFO 1 material, FIFO 2 material. Identification of loss in finished state. If you find something in the finished state, degree of completion for loss is 100%. Degree of completion, the question will say, I identify the loss in the finished state. I identify the loss in the finished state. Some question will say, material is added at the beginning. Material is added at the beginning. It means material is always 100% complete. Material is always 100% complete because you add it at the beginning, except for obviously normal loss, which is 0, and further work on opening WIP will become 100 minus 100, will become 100 minus 100. One question said, after everything is done, I apply protective packing. I apply protective packing to the finished component. Protective packing to the finished component. In that, when you do your DOC, when you do your equivalent units calculation, you can have material column, you can have labor column, you can have overhead column, you can also have a column called packing. You can also have a column called packing. In that, degree of completion for work in progress will be 0. Work in progress will be 0 because packing is done only once it is completed. Only once it is completed. This concept will be useful when you practice question. When you practice question. Now I come to one important area, inter-process profit, because this takes away sometimes 25 to 30 minutes. So I just want to focus on this very important area. If time permits, after this is done, I will do that reverse working question. Else that question alone, you will manage it. Now, what is inter-process profit is? An organization may say that whatever product I'm transferring to the next process, I will not transfer it at the cost. I'll transfer it at a cost plus a profit margin. Cost plus a profit margin. Why are we doing this? Because I want every process to become a responsibility center and show me profits. Show me profits. The problem which we are going to do, which will say cost plus a profit margin. That's not the ideal way. Practical world, they'll say you can manufacture at any cost. You will transfer your units at 100 rupees per unit. So if I manufacture at less than 100, I will make profit. If I manufacture it at more than 100, I will make a loss. Practical world, they will be given a price saying that you will transfer only at 100, 200, 300. So my objective would be to make it lesser than 100. Otherwise, what happens is process 1 says I'm least bothered. If I manufacture at 120, I'll transfer at 120. If I manufacture at 80, I'll transfer at 80. Practically, you cannot make them motivated. To motivate them, you will have to tell them that you will transfer it at cost plus a profit margin, or you will transfer at a specified price. Now, the headache with this is this will lead to challenges in profit recognition. Why challenges in profit recognition is first process transferred something to the second process, and first process said I made profit. Second process transferred something to the third process, again it said it made profit. Third process transferred something to the FG, again it made profit. FG is not sold. FG is not sold. Accounting standard revenue recognition says you cannot recognize profit. You cannot recognize profit. But we were happily recognizing the profit. So in case sale has not happened, from the closing stock, I have to remove the profit element. I have to remove the profit element. How we remove that is what the major chunk of the discussion is going to be. So in this, we write it like this: particulars. There will be a cost column, there will be a profit column, and a total column. There will not be units column. Units column will not be given. Particulars, cost, profit, and total. Particulars, cost, profit, and total. Once I do one or two processes, you will understand it. Let's see the question now. Question 8. A product passes through three processes: X, Y, and Z. Output of X and Y is transferred to next process at cost plus 20% each on transfer price. Transfer price means selling price, which means profit margin is 20% on sales. Profit margin is 20% on sales. It's at cost plus 20% on transfer price. Transfer price is selling price. Transfer price is selling price. So I have a profit margin of 20% on my selling price, on the selling price. And Z is transferred to finished stock at a profit of 25% on sales. First two processes, 20% on sales. It looked like, when you read, it may look like cost plus profit. It's not cost plus 20% on cost. Cost plus 20% on sales. 20% on sales and 25% on sales. I have opening stock, material, wages, manufacturing overhead, closing stock. Inter-process profit included in opening stock. My opening stock has some profit element, which I will remove. Like that, I want what is inter-process profit included in closing stock. That is the crux. The crux is what is the profit margin in the closing stock. Once you identify that, problem is over. Once you identify, they have asked us to prepare process account and FG account, costing P&L account, and relevant items in the balance sheet. Technically, I'll have to do 4 accounts: process X, process Y, process Z, and FG. X, very simple. You will not understand. You will not learn anything there. Y is where you will learn a lot of concepts which I'm going to explain. Let's open process X account. And okay, stock in process is valued at prime cost. This is a very important word. Valued at prime cost. Most of the exam question will only say prime cost. Will only say prime cost. What is the use of this? You'll understand when I do the calculation. First, process X account. Open process X account. Process X account. Particulars, cost, profit, total. Other side, cost, profit, and total. Cost, profit, and total. No units column. We will not have units column in this. Cost, profit, and total. To opening stock. Okay, so I use the word cost, profit, and total. This is technically called cost to company. Cost to company. This is profit, and this is cost to process. Listen, Company says cost is 20 rupees, but the process will say cost is 30 rupees. Reason is you are transferring it at 30. You're transferring it at 30. So cost is technically cost to company, profit is profit, and total is cost to process. As a process, my cost is the total column. As a process, my cost is the total column. What is the opening stock given in the question here? First process. Any profit element in that? No. First process will not have profit element. 15,000, 0, and cost. Whatever is given in the question is the total column. Whatever given in the question is total column. In that, if there is a profit element, subtract it. To opening stock, 15,000 is given in the question. No profit. Cost is 15,000. 2. Material cost. Again, total column. 2. Material cost. How much for the first process? 80,000. No profit. In an expense, I cannot have a profit margin. 80,000, 0, and 80,000. 2. Wages. 125, 0, 125. First, I write the total column. I'll always write the total column first. Profit, if any, there I write, and cost is balancing figure. 2 plus 3 is equal to 4. Column 2 plus column 3 is equal to 4. What is the next item? Manufacturing. Wait, I'll not write manufacturing overhead because overheads do not form part of prime cost. At this stage, put a total and call it as prime cost in bracket valuation base. VB means valuation base. Prime cost in bracket valuation base. In bracket valuation base. Prime cost 2,20,000. Stock is valued at prime cost. Stock is valued at prime cost. So I put a total and call it as prime cost, and the name is called valuation base. Name is called valuation base. Instead of writing closing stock in the credit side, we write less closing stock. We write less closing stock and net prime cost. Net prime cost. Closing stock, net prime cost. Closing stock given in the question is 20,000. First process, no profit margin. I'll explain second process onwards how to calculate profit. First process will not have any profit element because it did not receive anything from the previous process. It did not receive anything from the previous process. Net prime cost 2 lakh, 0, and 2 lakh. Instead of writing closing stock in the credit side, we write it in the debit side. 2. Manufacturing overhead. 2. Manufacturing overhead. Manufacturing overhead is 96,000. 0, 96,000. Total cost. Total cost 296, 0, and 296. Total cost 296, 0, and 296. Clear? Total cost is 296, 0, and 296. To P&L account. To P&L account. Now listen. Transfer price is equal to cost plus 20% on transfer price. Profit is 20% on transfer price. Profit is 20% on transfer price. Profit is 20% on transfer price. So transfer price is equal to 296 plus 0.2 TP. 296 plus 0.2 TP, you will get the transfer price. Transfer price is basically 20% on sales. Transfer price is selling price. Transfer price is selling price. What's the transfer price you get? 3 lakh 70,000. Profit is technically 74,000. Profit is technically 74,000. Profit is technically 74,000. Clear? Any doubts on this? Straightforward, simple calculation. First to process, no major learning. In profit, write 74,000. Total is column 2 plus column 3 and again put a total. Again put a total. 296 plus 0, 74 and 370. 296, 74 and 370. What this means is cost is 296, profit is 74,000 and transfer price is 3,70,000. Only one entry in the credit side by process Y, whatever is that final total. 296, 74, 370. That's all. Only one item, whatever was the last total. Account is tallied. Account is tallied. Only one entry in the credit side by process Y 296, 74 and 370. 296, 74 and 370. Any doubts on this? Clear? Process Y you will learn the profit element calculation. Repeat process Y account, same format. Process Y account, same format. Process Y account, particulars, cost, profit and total. Process Y account, write two opening stock. Two opening stock. What is the value given in the question? 27,000 total column. And there is a profit element. How much is the profit element? 4,000. Cost is 23,000. Cost is 23,000. 27, 4 and 23. Whatever is given in the question is total column. Profit margin could be there. You have to remove them. Profit margin could be there. You have to remove them. 27, 4 and 23. To process X, whatever you wrote in the credit side, to process X, 296, 74, 370. 296, 74 and 370. To process X, 296, 74 and 370. Any doubts on this? To material cost, to material cost, no profit element in the 65,000, 0, 65. Material cost 65, 0 and 65. To labor cost. Labor cost is 108, 0 and 108. Any doubts on this? Clear? At this stage, I'll put a total and call it as prime cost. I'll put a total and call it as prime cost in bracket valuation base. See, if question says stock is valued at factory cost, add factory overhead also. Add factory overhead as well. Prime cost 492, 78 and 570. 492, 78 and 570. Whatever is given in the question is always total column. Just keep that in mind. Everything else will automatically fall in place. 492, 78 and 570. Less closing stock. Less closing stock. How much is given in the question? 32,000. Listen, very simple. Distribute this 32,000 in this ratio. Listen, distribute 32,000 in the ratio of 492 is to 78. 492 is the cost element, 78 is the profit element. 78 is the profit element. In the calculator, 32,000 divided by 570, into 492, 32,000 divided by 570 into 492, 27,621, 27,621, and divide by 570 into 78, into 78, split in the ratio of 492 is to 78, split in the ratio of 492 is to 78. 27,621 and 4,379. The profit element on the closing stock is 4,379. The profit element in the closing stock is 4,379. 4,379. Any doubts on this? Net prime cost. Net prime cost. Net prime cost. Net prime cost to factory overhead. Factory overhead. There's some figure given in the question on factory overhead. It is total cost total cost total cost to P&L and again total to P&L and again total to P&L and again total. Any doubts till this? Now listen, transfer price is equal to cost plus zero point 0.2 of transfer price. Listen for a minute. Cost means my cost. My cost is 6 lakh 10. It's not the cost column. It's not the cost column. In process one, it did not make a difference because cost column and total column all were same. In the second process onwards, my cost is the total column. My cost is the total column. So transfer price is equal to 6 lakh 10,000. Cost is how much? 6 lakh 10,000 plus 0.2 transfer price. 0.2 transfer price. Get the transfer price. And profit is 150 to 500. Profit is 150 to 500. Clear? So to P&L 150 to 500, and only this item will go to the credit side. Only this item will go to the credit side. Any doubts on this? Clear? My profit margin is on cost plus 20% on sales, and cost is my total column, CTP, cost to process. Cost to process. So this is what I was saying, cost to company, cost to process. You would have done till this. You would have done till this, and this is how profit element is calculated. Now what I want you to do is I'll give you exactly 5-6 minutes. Third process you will do. Fourth process I'll take you through. Third process you will write, listen, first you will write opening stock, then you will write to process Y, then you will write material, then you will write labor, you will write valuation base, then you will do less closing stock, net prime cost, to factory overhead, total cost, then to P&L, and finally total. Profit margin here is 25% on transfer price. Profit margin is 25% on transfer price. Take around 5 minutes, 5 to 6 minutes, and close process it. Close process it. Then I'll take you through the FG and other process. So assuming you're done, now listen. This is how process Z would have looked. To opening stock, to process Y copy paste, direct material, direct labor. I add up, and closing stock is 39,000 divided by 944. 500 into 708,379 is the cost column, and 236,121 is the profit column. And in the end, the transfer is happening like this: 745,629, 550,371, and 12,926. This is going to be very critical when I do FG process. Now open finished stock account, same columns. Finished stock account, finished stock account. Two opening stock would have been given in the question. Two opening stock for the FG process. I'll write the opening stock in a minute. Let me first write this to process Y. I'll copy the numbers. To process Z, sorry. To process Z, 745,629, 550,371, 12,96. This comes from your process Z. To process Z, 745,629, 550,371, 12,96. 1296. Process X I did, Y I did, Z is copy paste of Y. Z is copy paste. The profit margin is 25% on sales. The margin alone is different there. Opening stock given in the question is 45,000, which has a profit element of 20,000. Has a profit element of 20,000. So two opening stock 45,000, profit 20,000, cost 25,000. Cost is 25,000. Less closing stock, less closing stock, less closing stock. Closing stock given is 50,000. Split in the ratio in which you received the item. Split in this ratio. 745,629 is to 550,371. That is 50,000 divided by 1296. 50,000 divided by 1296 into 745,629 equal to 550,371 equal to 50,000 divided by 12,96,000 into 745,629 equal to 550,371 equal to 50,000, 1296 into this number and into the next number. Any doubts on this? Clear? You have to segregate in the ratio. The question has said stock FG is valued at the price at which it is received from process Z. From process Z, I receive in this value 745 and 550. 745 and 550. So in that ratio, I distribute. Right, net cost, net cost, net cost, opening stock plus production minus closing stock. Opening stock plus production minus closing stock. This is technically COGS. Technically, this is COGS. Now listen, FG is saying, the FG process says cost is 1291. The FG process says cost is 1291. But from the company point of view, cost is only 741. Cost is only 741. The real cost is only 741, but the company first process added something, second process added something, third process added something and inflated the value. In the credit side, by sales. By sales, 14 lakh is the total column. 14 lakh is the total column. And company knows only one thing. Real cost is 741. Real cost is 741. Balance is profit. Real cost is 741. Balance is profit. Balance is profit. If debit and credit side all three columns match, okay. If they do not match, to P&L. If they do not match, to P&L account. If it is tallying, okay. Cost column will tally. Profit and total column will not tally. Cost column will tally. Profit and total will not tally. Write to P&L. Write to P&L. To P&L account and total. to P&L account and total. Now, accounting wise, I did process 1, process 2, process 3, all that is okay. Real simple logic is this is the real profit of the company. Process 1, we wrote some number. Process 2, we wrote some number. Process 3, we wrote some number. And even in FG, we are writing all those are not profits. The real profit is 658, which the P&L account will also show. The P&L account is going to show 658, 138. That's the real profit of the organization. Open P&L account. Open P&L account. Particulars amount, that's all. No three columns and all. Amount, particulars amount, P&L account, P&L account. The real profit is 658, 138. I should get that number. If I get that number, then all calculations till now is correct. If I don't get 658 in the P&L account, it means you made a mistake somewhere. It means you made a mistake. Now, every process you wrote to P&L by process X. Tell me what amount you wrote in process X to P&L. 74,000. By process Y. 1 lakh. By process Z. By FG. That also we wrote to P&L. It doesn't end here. Listen, these are 4 numbers. Okay. We had certain opening stock. On opening stock, this was inter-process profit which is realized in the current year. Because opening stock would have got sold. So next item, by opening stock reserve. Opening stock reserve. By opening stock reserve, or you can call it as by reserve on opening stock. Both are technically not a big difference, but this is right name. By reserve on opening stock. By reserve on opening stock, or by profit on opening stock, which is 0 plus 4,000 plus 10,000 plus 20,000. All this profit I realize now. All this profit I realize now because opening stock is sold. Realize means it is adding to my profit credit side. 2. Reserve on closing stock. In your notebook, process 1, closing stock. What was the profit element? Closing stock profit element. Process 1, 0. Process 2, 4,3. Process 3, 9,7. FG process 21. Add up all this. And tell me the balancing figure. That will be the profit which you wrote there. Balancing figure is the profit for the year. Balancing figure is the profit for the year. It will match that number which you had earlier written there. $693 minus 658, 138, and that's the profit I wrote there. That's the profit I wrote there. This is frequently tested today at home in the RTP. There is a MCQ based case scenario, latest RTP. You, in order to solve, you will have to go through these detailed steps. You will have to go through this step, then only you will get the MCQ answer. You have to go through this first process. No profit element in opening stock, no profit element in closing stock. Second process onwards, there will be profit element split in that ratio of profit versus cost. And when you transfer, cost for the process is the total column. Cost for the process is the total column. Third part, I'm not doing it. In balance sheet, when I disclose them, I will have to remove the provision for unrealized profit. Remove the provision for unrealized profit from the balance sheet value. From the balance sheet, this is closing stock, this is closing stock, this is closing stock, and I remove the provision for unrealized profit. Provision for unrealized, because in balance sheet you can value it only cost. You cannot value it at cost plus profit and all. That and all is not possible, because second process, third process onwards, the profit element is added. Now, I'm not doing that reverse working question, but only one request, somehow do that reverse working question. And any question in your ICISM, you can open any question and do it. Follow the format which I said. You will 100% get to the answer. In case you get stuck, the same question will be there. If in any ICISM question is there, same question will be there in my question bank in the format which I said. In the format which I said, you'll be able to do. There is a small element on operation costing. Operation costing is nothing but a sub part of the process costing. It is a sub part of the process costing. One process can be broken down into operation 1, operation 2, operation 3, operation 4. What they may end up asking is a product passes through 4 operation. Loss in 4 operations 25, 20, 20 and 16.67. I produced an output of 1000. How much was the input added? How much was the input added? In order to do this, let's assume I start with 100. I start with 100. First process 25 is my loss. First process 25 is my loss. So my output is 75. Second operation 75 minus 20%. 75 minus 20% of 75 is 15, 60. Third process 60 minus 20% of 16, 48. Fourth process 48 minus 16.67 percentage of 48, which will technically be 8. So my input output ratio is 100 units of input, 40 units of output. 100 units of input and 40 units of output. Output is equal to 1000, input is balancing figure. 100 is to 40 is the input output ratio. Sometimes an MCQ may end up coming, or a question like this may come where the loss percentage is not given directly, but you have to calculate. The first process loss is 1 by 3. In the first process, the loss is 1 by 3. In the second process, loss is 198, 18,000. Mathematically, the number will be 1 by 11. Mathematically, the number, or you can write percentage 18,000 divided by 1 lakh 98. Third process, the loss is 1 by 6. You can say you started with an input of 100. First process 1/3 loss, you got a net number. Second process 1 by 11 loss, you got a net number. Third process 1 by 6 loss, you got a net number, and that will give you the input output ratio. With this, process costing is over. Again, I'll repeat, according to me, one of the easiest areas, but when I was doing, somehow I saw you were struggling a little bit. That's why I had to do it again. But I'll say again, if you solve the questions which are there in this material also is sufficient. Along with, for some confidence, you solve your ICISM question and solve the RTP Jan 25 question. RTP Jan 25, which is on interprocess profit. With this chapter is over. Tomorrow I'll do the balance chapters. We'll end with this thing.